Alrighty. And it is Friday, April 24th, 7:12 a.m. And story of the morning has to be, we are cooking. We are cooking with Intel, baby. Intel absolutely just humming. Up about $14 this morning on earnings. And yeah, so we are cooking with Intel. So really a nice day kind of brewing today for me, at least in the real money account in Intel. So we is cooking, baby. So just to go over that one, and because that's really where the fun is today, is in some of these earnings stocks, and not so much in the futures market. Basically fucking sucks. I mean, let's face it. It's horrible. And it is what it is. You know, it's again, I've been saying all week, it's time to kind of shift the focus a little bit and kind of go back to my roots a little more and start doing some more options trades, because the futures market blows right now. It's terrible. And, you know, it is what it is. It's usually pretty normal for this time of year. We're a little early this year, but, you know, there is definitely something to sell in May and go away. You know, because I remember I've been doing this a long time, and it literally is every summer. You know, futures trading in general blows. And you're going to get maybe a handful of days every month. If you're lucky to get 3 or 4 days with some decent price action for that month during the summer, you'll be lucky. And so, you know, realizing this, I made the shift, right? So we did a trade in Intel. That's cooking today. I also have Intel stock that I've had for quite some time. And so that's really why I'm cooking today with this. This sucker just exploded on earnings. And I didn't actually even look at it. I just assumed that that it was pretty darn good. And they literally posted what looks like a surprise beat by a lot, even on revenue, like a 9% move in revenue. And now probably most of that, let's face it, most of that is probably AI driven. But I will say this, you have to realize that Intel probably has, even though they've been falling off for years, they probably have the biggest footprint in data centers overall right now. And you have all these data centers and all these cloud providers like the Mongos and the Oracles, Microsoft, Amazon, Google, and other smaller providers. You got like, who the hell is it? I can't even think of it now. I can't even think of him now. It's on the tip of my tongue. Another big provider, DigitalOcean. But you have all these providers, right, that are going through refresh cycles where they're refreshing their hardware. And so you kind of have a lot of that going on in the background besides this AI bullshit. And so I think that's where this is mostly driven, is in that refresh market. And let's face it, Intel's been a piece of garbage for a long, long time. And it looks like maybe they're back. I don't know. We will see. But they have everybody lit up today. So if you are a chip producer of some kind, likely all of these stocks are going to be running today a bit. So because you have AMD up huge out of the gate. You got Micron Also gapping up. AVGO, Broadcom, NVIDIA, actually down a little bit. And then SanDisk, all of which out of those, only one down. And then you're seeing a little more carryover from some of the, I would call them probably the users, the Amazons, the Googles, and Oracle. All up as well, which has the NASDAQ up. And that's what's kind of carrying the NASDAQ right now, with oil kind of spiking and there being somewhat of like little small bad news, I guess. I don't know if it's bad news. I think it's more that it's not good news coming out of Iran. But then again, is it so bad, and is it anything that anyone didn't expect? I mean, I expected... I'm not surprised by what's going on over there. And I've said it once, I'll say it again. You basically have this basic fractured nation that there's all these internal battles going on now on who is in charge. And, you know, everything we're doing over there, and look, folks, you know, and it doesn't really matter who the president is in this point, and because he's not really in there on the ground doing the negotiations. It's more or less the CIA and the military, and probably some of the cabinet members like the Rubios and that type of thing. They're the ones who are actually doing the actual negotiations on the ground, so to speak. And, you know, because Trump is more just the PR front person for all that. And so if you don't think they haven't thought of all of this going forward, I really got to believe you are just a complete imbecile, because they had to have known this was going to happen, just because everyone knows the way Iran was structured. And basically what you're seeing is, like, that's why you're seeing these, like, news bombs come out, and they're just like, they're garbage news. And then all of a sudden it's like, then an hour later, another news story comes out that completely, you know, disqualifies the last news segment. And so, like, what are you doing? So, and what tells me is that you just have a fractured country over there that's basically starving right now. They have no revenue coming in. They're not selling any oil. There's no money coming in. They shut all their bank accounts down. And they're just like hunkering down in there, hoping that we get tired and we just kind of pick our ball up and walk away. And I don't think that's happening. And I think they actually collapse faster. I mean, because look at it from our perspective. I mean, with what's going on over there, and oil's still under $100. Now, I'm not saying it can't change. That can't change really fast, but it's still under $100 when you had all these so-called experts, one after another, on every news station saying oil's going to be $200, blah, 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 right? Baby. And here we are, you know, after all that and 2 months now of war, if you want to call it that. I think it's more of an operation. I don't really call this a war. But anyway, call it whatever it is you want. And oil's still kind of at $95 and still hasn't gotten higher than the peak we were 4 years ago with the brain dead idiot. And so, again, like, what are you doing? And why are you cheering against the U.S.? And so that's kind of the gig, folks. And that's kind of the way I look at it. And I always say, look, I don't watch the news. I watch the markets. The markets are going to tell me how good or bad things are going over there. And, you know, all the spike that happened yesterday on all that so-called, again, I'm not going to call it good news, but it wasn't good news. But again, it wasn't that bad of news. And that's why you're seeing it's actually all gone. I mean, we're basically back where we were before all that business. So that's, and then you have the NASDAQ up 355 points, all-time record highs again. And here we sit. And so anyway, that's kind of the take here. And I think if you don't make the move here to equities, and you just continue to sit here in the futures and only trade futures, you're going to give up a lot of opportunity. And I've told a lot of folks who've actually started trading futures and then got into options, that's probably the worst transition for you to do. It's always best to be an options trader going in and trade and starting to trade futures, because as an options trader, you're very calculated in what you do. And trading options does tend to give you that cerebral kind of like edge, I think, when you're looking to do something, right? Because you're looking at your probability of profits, you're looking at the Greeks, you're looking at, should I sell options? Should I buy options? Is this area where I think we'll sit? And all that analysis really does is it actually just makes you a better trader overall, not just for options, but in anything. And then if you make the move to futures, you'll be a lot more composed. And when you start trading futures, you'll be a little better calculated than you are if you're coming from futures and going to options. That's why a lot of futures traders that come from futures and go into options get buried the first 6 or 8 months in trading options, because it's a completely different world. You're going from being a swing trader using calculated methods to do your trade to basically, momentum, very, very short time markets in the futures that are extremely reactionary and don't always move on technicals and math because they're so short term, that you wind up blowing up in your options accounts because you're demanding too much too soon. And so anyway, that's kind of, again, my take. And then I'll kind of pivot here too. And I know I'm kind of rambling a lot, but what I wanted to suggest to folks who are interested in doing, like I say, I'm in this Flex account. I actually I'm carrying a loss from last night. I took a couple trades. They didn't work out. They were small. I've been taking little stabs here and there. Haven't really been trading. But what I want to tell people, look, if you want to trade in these combines and in these valuations, nothing wrong with that. But do yourself a favor. Get one evaluation account, whatever it is. Make sure it's one and only one. And have that be your fuck all account, right? And what I mean by that, that's going to be the account where if I'm feeling aggravated, I'm feeling twisted, and I'm like, and I start feeling myself, because look, I don't care how long you have been doing this. You could be doing this 3 weeks. You could be doing this 30 years. There's going to be a time when your brain just snaps and you're just like, you know what? Fuck all. Like, I'm just going to fucking go nuts. I'm going to go ape shit. And you know what? And you need one of those accounts. And so whether it's a practice account, I always find it better to be a combine, because then it's something that you have a little skin in the game. So it actually hurts when it blows up. And I have one. And it's right here, and it says it's ineligible. And this is my reset account, folks. I've reset this probably about 3 or 4 times already since I've been doing this. And I've been doing this, and this is my fuck all account. And I love it, because when I need to go on fucking tilt, and I just need to just throw shit against the wall, or I just want to test some fucking crazy thing, or for like right now, we're running like this, and like the trader in me says, "Oh wow, we're gonna hit a reversal here. We're gonna hit a reversal." I mean, we're just running too fast, too quick. But I would never take a trade like this in my own account with my own money, and I would never take it in even a, in a funded account with my own money. I just wouldn't do it. And if I did in a practice account, who gives a shit? But if I do it in a combine, and it turns out that I'm right? I have the potential. If I'm right, I could possibly pass the combine, right? And so anyway, my point is have one of these like fuck all accounts where when you need to go on fucking tilt, go and like, you know, I think I have 2 resets left because I've gained resets on this account. I don't know why. I have no idea why, but when I go in and it says you have 2 free resets. So I don't know where I got them from. I guess Top Step just gave them out at one point and I never realized it. But anyway, when you have that feeling where you just want to go fucking nuts, reactivate your fuck all account and then do it in there. And trust me, it feels so much better knowing that you got it out. You got it out, you blew up the account, but so what? That's what that account is for. But you didn't do it in an account that matters. And I don't really see anybody talking about this. And I think it's really important because, you know, as much, and this will keep you, trust me, this has kept me from blowing those other accounts. Because, like, look, this blew up, and I was like, I blew it up a couple days ago, and I was like, yeah, all right, and like, everything went away. It was amazing. All my anxiety went away, everything, and I felt so much better. I was like, wow, I got it out of me. I'm glad I didn't do it in a real account, in one of my real accounts that would have really just fucking crushed me. And the nice thing about it is, while I was doing it, it was pretty exciting because at one point, I think I was up about $2,500 in this, in the same trade, and I was like, you know what? I got $500 left, and I should probably just, you know, I should probably get out of it and then, you know, do another trade at some point. But I was like, screw it, and then eventually went and hit my loss limit. So it was that extreme in there. So I went from almost passing to literally like blowing it up all in one session, and it was pretty cool. It was pretty cool. And I never hear anybody talk about this, but do have a tilt account and just have it be one. Don't have it be multiple. And then that's the account that you blow up. And you can see I have 3. I have these 2 others. I got this Express. I'm working on another combine. I'm almost there in this one. I'm about $1,000 away. I'm literally 2 or 3 trades away from getting that one funded. And this is my fuck all. You know, because the practice accounts suck. I mean, let's face it. You go into a practice account, there's like literally no, like I said, there's no skin in the game. And so if you happen to be right and you go on tilt and you're in a practice account, like what the fuck good is that? You know, and really the worst thing that can happen to you in one of these tilt accounts is for you to get funded and have it happen, right? But, you know, then my advice is if that does happen in there, then go get, you know, take that, go activate that account, and then go get another fuck all account. Just make sure you always have one fuck all account. I'm telling you, it'll make you feel a lot better. And so anyway, that's kind of one thing I wanted to point out today that's really helped me in this whole trading the futures here. And as I said, I've been doing it since January. I got funded in February. I kind of just took the month of January and February and just like completely focused on getting that account passed and getting into the Flex account. I don't have a ton of money in there. I have under $1,000 in that Flex account, but I'm treating it like real money, and my goal is not to blow it up. And like I said, I would rather blow up a combine and get those shitty trades out of my system so that when I do trade the Flex account, I'm not half cocked. So anyway, that's the story. And I'm not going to go into levels here on the futures because, folks, let's face it, you know, you have them, you have the indicators, you're well aware of what the hell is going on. And we are just, you know, whether it's the Russell right now is probably, I think, the best one to trade right now because we're still not at all-time highs, back to all-time highs yet. We're still in a range where we could literally go down or go back up. So to me, it's tradable the Russell's tradable here. The NASDAQ is not tradable at this point. I mean, as you just see this 1 hour candle, we are just blasting off. And if you're just going to go and take stabs at the highs, it'd be my guess. Go ahead. I just care not to even look at that. Because what's happened with the NASDAQ is even when it's rolled over, it has never really gone and rolled over and gone the other way in true reversal form. It literally rolls over and chops and chops and chops. And so, I just think it's again, if that's what you want to do, by all means, go for it. I just can't touch that index right now. And, I got ripped up twice yesterday. I took 2 trades. Both went profitable for a decent amount of time. Didn't hit my target, reversed, went the other way, and took my stop out. I took pretty much the same trade again, and the same exact thing happened again. And where looking back, I should have set my profit target a little bit tighter. But again, hindsight is the most profitable trader in the world. That's kind of the price action. So even if you do get a reversal here, and it's shaping up where, look, the trader in me, and as I said, if I had my fuck all account, I would be looking to fuck all this account and go all in short, because likely we're going to get a pretty heavy retrace on this. But yeah, so I'm staying away. Gold, same thing. Gold has been just an absolute chop house. An absolute chop house. And one of the better traders that I've seen in quite a while, I'm sure everyone's heard of that dude Dakota over on Top Step TV. I've even watched him last night. It was the first time me watching him. I've seen him go a little bit, he's not going to say it. He ended up making his money back. But I seen a little sense of a little frustration trade in there. And again, it happens to everybody. I'm not going to discount the fact, like, look, and there were people in the comments kind of razzing him a bit, and he was getting a little agitated. I could tell. I mean, because it is. I mean, you got these fucking people that come in and fucking talk shit. And, and it's easy to talk shit in chat. But in their defense, I did see him kind of go on tilt a little bit. Because, here he was originally he was trading a couple of contracts, 2, 3. And then on his last try, because he got stopped out like 3 times, I think 3 or 4 times, and maybe the 5th time, it was either 4th or 5th time, he went in and he started using bigger contracts. He was going in with 3 and adding 3 as it went. I think he was up, I don't know for sure, but I thought he was up to almost 10 micros. And like I said, he did get his money back, and I give him a lot of credit. He stuck to it. But, when you're, I get it. I get it. I've been there, and, so I'm not trying to diss the guy. But what I'm trying to say is when you see the frustration even there in someone like that who's pretty astute trader, it happens to everybody. And that's been gold. Gold has been because it's been a real, let's face it, if you look at this chart here in gold, and this is an hourly, this is a chop house. But then if we go back before this, it was really easy during this phase to just buy the dip, right? You get a dip, you go in, you buy gold, and you're golden, right? Then we actually had this where it was sell the rip, and it was pretty clear. It was pretty decent price action where if you saw weakness, you could sell the rip. And then going back even a little further, again, back to buy the dip. It was pretty, I'm not going to say it was like, you could see it no matter what, but it was a trend, and you could actually follow the trend, and you could be a little bit more of a trend trader buying the dip because you had that assurance that the buyers were going to be there. And again, you go back even further, right? And then you have this, which was just buy anything. Not even the dip, but just buy any fucking thing, right? And then, but now when you start looking at how it's been trading recently, not so much, right? It's not buy the dip and it's not sell the rip. It's a lot of indecision. It's a lot of indecision because although we've had some pretty good rips, we haven't really had, and we've had some pretty good dips, and then we're not getting that like acceleration the other way. Where I can honestly say the short trades that I've had in gold over the last month have been much better than the long trades. The long trades have been really tough. They've been really tough. And you can see just from the price action that that's the case. And so, that's what's going on. That's why I've actually kind of dialed back a little bit on trading gold because of that. It's been a really, really... And the other problem with gold is that when it gets into these phases, like it is now, gold trades really thin. And it trades a lot like, if anyone's familiar with natural gas, it trades a lot like natural gas and even copper and some of these extremely thin, volatile markets that, gold does actually trade like that traditionally. And that's what a lot of people forget. Like, so if you go back a couple of years, Gold used to trade like that. I remember gold trading just like this, and that was the reason why I didn't trade gold. It's only in the last year or two where gold has actually been a decent tradable market with good volume that it's become kind of a staple for a lot of, basically a lot of these funded and prop firm trading folks. But this is always how gold has traded as far as I can remember. And again, this new price action that we've had is, again, new. And actually, it's going back to the way I remember it trading. And again, that's why I stopped trading it, because it was a pain in the fucking ass. It was a pain in the ass. It didn't move. Even in the off hours, it didn't go anywhere. It was just literally like, and then out of nowhere, it would just stop and go in another fucking direction. And you were like, what the fuck is going on here? And again, that's just all the characteristics of a thin market. And, I prefer to stay out of those thin markets when they're thin. And, unless things change in gold and the volume picks up, and this is either way, it's not long or short. It's really a matter of, participation. And when there starts to get more participation in gold, I'll start trading it a little more actively. The action has definitely been in the NASDAQ. That has been the biggest mover overall. But as I said, I think going forward, I think the Russell here, especially with the NASDAQ making all-time highs, and as far as today and maybe possibly next week is concerned, I think the Russell is going to be a little bit easier to trade unless, right, all things remaining the same. If the NASDAQ keeps going up, like, what else are you going to do? I mean, if you take the leap of faith and you just get long, fine, go ahead. But if you're going to trade it, I think it's going to be a rough one. So, and I've been saying this all week with the NASDAQ, that I've found that NASDAQ's best to trade at night. I've been finding it much better to trade, and I didn't find it very good last night because I took a couple losses, but for the people who were on the other side of my trade, they did fine. So, but yeah, I think the Russell is going to be the place to be, and that's where I'm going to stick with going forward with Fuchs. And so you're probably going to see a little less content on the NASDAQ overall. And it's crude oil here actually really dumping. That's going to be good for all the markets probably as a whole. But although I'm not seeing gold, again, I'm not seeing gold move, even though crude oil, that's been kind of the there's definitely been an inverse correlation between oil and gold, and we're not seeing that play true. Again, I think most of the money is being like funneled to the NASDAQ, it seems, because even the Dow's not even having a move today. Or the S&Ps. I mean, they are up, but again, it's not the type of move the NASDAQ's having. And a lot of that's attributed to the Intels and the chip makers in there. So anyway, last but not least, we're going to talk a little about soybeans, because I think this market gets interesting now as we start getting into so we had the planting months, and those are kind of past, so stuff and shit's in the ground, and it's probably started growing, and so now we get into the growing season here. And I think this market will start to get a little more interesting as we get into the summers. And maybe a little more interesting than the overall market. So I'm actually starting to look at these again. I did one trade a couple nights ago in soybeans, and I got stopped out. But I do like this market again. And, again, use all these indicators because they tend to work pretty well. Again, you always see slippage in here. But I am starting to see a little bit more volume starting to come in on these beans. So, and that's really the case for the grains as well as a whole. I just choosing beans because to me they're the kind of, as I said, they're kind of like the ES of the grain markets overall. All right, and so that's that. And I'm not trading cattle as much as it definitely interests me. I don't know enough about the market, and they're talking about a thin market. Cattle is really thin, and you really got to know what the F you're doing with it. Maybe I'll trade it in sim a little bit and see what happens. But it is kind of an interesting market. To me, again, it's outside of the equity world, and so that's why I'm having a little, because I'm looking to find something else besides the oil and the bonds and the golds and the silvers and the copper, right? I mean, these are outside of the norm, so to speak. So the beans and the cattle. And I think I trade. Actually, I don't think I've ever traded cattle. I think I've traded feeders, which are GF. And with the difference between, and look, I don't want to make this an agricultural show, but the difference between feeders and live cattle are the ones that are going to market, right? And as disgusting as that sounds, they're like on the slaughter block. Right, so they're going to market and being sold for food, where feeders are the younger feeders, right? They need to be fed, and I think feeders are cattle under 2 years old, is how that works. So feeders are like the futures market of cattle, of live cattle, is probably the way to look at it. So I don't believe they will actually work in tandem. They may even be inversely related. I mean, looking at the charts, it doesn't appear to be, but again, I don't know. But I do remember trading feeders once or twice many moons ago. And I've never really looked at what they are. I mean, let's look at LE. I don't know what the margin is on these or anything. I do know they're very light, and they're only open for about 3 or 4 hours. They're not like open all day. I think they open at 9:30 and they close at like 12:30. They have some like weird, and they're not open all day. I do know that. So feeders or cattle, they want $4,500 worth of margin. to trade one cattle contract. Now, I don't know. Let's see here. Let's go in here and let's go to Amped Futures. Let's see what Amped charges. Trading info margins. Let's see what Amped charges for day trade on live cattle. Cattle. It's probably, I don't believe they give you much, to be honest. I do not think they give you very much. Where is the cattle? I mean, day trading on soybeans is another reason why I like the grains. So if you're going to day trade soybeans, you do get, the margin on those is only $6,600. So that I think is nice. I don't really trade those micro ones. Actually, I don't think I've ever traded the micro soybeans. I did the mini. I've traded this one, the XK. Didn't particularly like it very much. I haven't tried these micros. I have to see if, I don't know if we can trade those on. I don't think I could trade those on. I don't think they offer those on Top Step or the. Then you got Class A milk. I don't know if anybody knows this about Class 3 milk, but I believe this is the one commodity that they still they write shit on the chalkboard. Or I don't think it's an actual chalkboard. It's probably more like a digital whiteboard, but I think they write the numbers on a fucking board still. Yeah, so there is there's a bit of a discount here for live cattle. It's $1,400 day trade, so that's not bad. And same thing with feeders. Feeders is $2,600. So there is a bit of a discount for day trading cattle, which is nice. Now you don't have to carry all this margin to be able to trade it. That's why if you're going to trade futures, folks, in your own account, don't do it. Don't do it in like a Thinkorswim or Tasty Trade or one of these like bigger type outfits. You need to go to like a futures. You need to go to like a true futures broker, and I use Amped. Because they're probably, I think they're probably the best for retail anyway. I don't know who anybody else is. I know a couple folks use Dorman, and then I know some other folks are using that Ninja brokerage, which I always thought sucked. I never could stand them. The nice thing about Amped is you can use CQG data feed, which I think is tenfold better than Rhythmic. Rhythmic blows. CQG is good. So anyway, there is a margin, reduction for day trading those products, which is cool. And and then this is why you trade your own money. And then this is again why I always tell folks, look, you're chasing around all these prop firms, and they're telling you like, oh, it's a $50,000 account, it's a this, it's a that, it's a this. It's not really a $50,000 account, folks. It's not. Because really what it is, it's a marginable account, which means they're basing it on the day trade margin required. Even though it's fake, they're basing it on these day trade margins that they're able to get. Again, even though it's fake, right? It's not a real account where it's actually in a firm like Amped. Right? It's completely fucking fake. Like the whole market itself that they're offering you is completely fake, which I don't think people understand. I really believe there's people that actually think that it's a real account. I really, really believe they do. I mean, 'cause the way I see these people act and operate, I say to myself, that's a fucking fake account. So basically what they're basing these prop firm accounts on is what this day trade margin is. So if you're trading one CL and you're only able to do, say, 5 contracts, right? That account is based on that day trade margin. Now, you don't get a break on these products. you don't get a break on these big products. You know, the golds, the crude oil. I think there is a bit of a discount on the big equity. Yeah, like S&P is $400, a Nasdaq is $1,000, a Dow is 500, the Russell is 500, and so this is the amount that you need. So when you're trading E-minis, and let's say you have a $150,000 combine, and it says you can do 9 contracts, you're really only using $9,000 worth of margin, even though it says it's $150,000. That's fucking bullshit. It's fucking bullshit. You're basically in a $9,000, $10,000 account because you're only using $1,000 because they don't let you carry, right? Because they tell you, oh, you got to be flat by 4. Well, you know why you got to be flat by 410? Is because the minute you carry over 410 at the close, you're going to carry costs, and what's going to happen? This maintenance is going to kick in. And so you're going to have to come up with fucking 40 grand per contract to cover the carry costs. And so that's why they don't want you to carry. So just be aware of that. Like, I mean, there's a lot of shit to unpack with these prop accounts that no one, I feel, is talking to people about. And anyway, you know, this is the real world. And likely, if you're going to trade your own account, these are the parameters that you're going to kind of like work within. That's why a lot of folks now are actually moving to the micros, because I can trade, and I trade the Russell micros a lot because I don't keep a lot of money in my Amped account. I only try to keep maybe $1,000 in here at a time. And when I get, you know, when I start gaining money and I start getting money in there, I suck it out pretty quick because I don't want it sitting in there. You know, even if I'm over $200, I take it out. I don't care. Because I don't want my money sitting in a brokerage account, because I can trade, I can trade 10 fucking micros in here with $1,000. Same thing with a NASDAQ. I could trade 5 with $1,000. I could trade 5 contracts in here of mini NASDAQ for as little as $1,000 in margin. Same thing with the E-minis. Right? I could do 10 easily. I could trade 10 of these with $1,000. No questions asked. I can't carry, right? If I go to carry overnight, I'm going to have to come up with money. They're not going to allow me. They'll probably liquidate me is what will happen. Because very rarely do they say, oh, add money. They just liquidate your ass. It's a futures account. They don't fuck around. It's not like margin where they're like, oh, you know, you got to put money in your account by tomorrow. They're like, no, you're carrying. You don't have the fucking money in there. And then they hit you with a fee, too. They hit you with a liquidation fee because basically they're going to charge you margin interest for money that you don't have. So, but anyway, this is the real world, folks. This is how it works in the real world. And so when you see these trading accounts that like are 150 and people are like, oh, I got $550,000 account, so I'm trading 500,000. No, you're not. You're not trading $500,000. You don't have fucking 500. They gave you maybe fucking 10,000. They maybe gave you 10,000, especially if you're trading micros. They maybe gave you 10,000. More than likely, you got fucking $2,000 or $3,000 worth of fucking margin from them. And realistically, they didn't give you any margin at all because you're in a fucking fake account. You're in one of these express funded accounts that's not even real. So they're not even accruing. There's like no margin even involved. So that's why it doesn't cost them anything. That's why they're like, oh yeah, you want to do XFA? Yeah, go ahead. Oh, you only get half the fucking money to pay out? Yeah, sure. They know you're going to fucking blow the account. And so anyway, if you want to get in the real world, this is the way to do it. Go to a place like Amped. I always suggest only work with like $1,000 at a time. You know, keep that limit hard, and I've had the $1,000 mark on this account for a long, long time because I have never needed to really do more in there. You know, I've been able to do because I have all. You know, futures are not 100% of my job, so or 100% of what I do and trade. But I want to have access, and so this is a perfect way to get access. And again, if you trade in micros, you only need $1,000, folks. You only need $1,000, and it's real money. It's not like fucking Play-Doh. It's not Play-Doh Monopoly money like you're playing with a prop. Now, look, there's a lot of other things that are involved since it's your own money. The losses hurt, and they're a little stiffer than what you're probably most comfortable with. But on the other side is you're going to have to pay like $30 a month for data feed, right? So CQG is going to hit you for, AMP will hit you for the bill, but it's going to be $30 a month for the data feed for this. So, and just be aware of that because you have to pay for that. That's another thing you don't pay in these bogus accounts. You're not really paying for a data feed because you don't need one because it's not real fucking money. Right? I mean, this can be coming from, this is coming from a fucking simulator, which isn't even on the exchange. So, on the exchanges. So that's, again, you don't have to pay for that. Yeah. And so, that's kind of just something I wanted to say as well. I don't really have anything else. It does look like we did sell off, right? So if you did get short up there, hallelujah. But how do you freaking call that? But anyway, that's all I got. Have a good day today. I'm likely not going to do much. I'm just going to manage my own money mostly today, and maybe take some profits on my